Hello guys, welcome to my channel. In today's video, I'll be showing you one of my cleanest strategies, the Weekly Wick Zone Strategy. I have talked about this strategy in my previous video, but many seem to be confused at one point or the other. So in today's video, I'll be bringing clarity to that. This strategy works on the Forex, crypto, indices, even on the stock market, and it can help you to catch sniper entries with confidence. One good thing about this strategy is that I do my analysis on weekends. I use Saturdays or Sundays to plan my week without getting stuck all day analyzing charts. And after that, I set my alarm and weeks. It gives me enough time, to focus on other aspects of my life. So without much ado, let's get started. First step, go to the weekly time frame. I'm going to use this to illustrate before giving you a couple of examples. So as you can see, we have our bearish and bullish candle for the previous week. Our emphasis is on the week. We are looking for a candle with a strong wick. If it is bullish, we only care about the lower wick. But if it is bearish, we use the upper wick. But here is the rule. Only mark it if that wick is stronger than the one on the other side. That is an indication of a clear rejection. What this means is that if this is a bearish candle, we want this upper wick to be longer than the lower wick. We want this upper wick to be longer than the lower wick for it to be a valid supply zone. On the other side, if this is a bullish candle, we want this lower wick to be longer and show signs of rejection than the upper wick for it to be a valid demand zone. If this is confirmed, we can go ahead to mark out our zone. If you are the type of trader who likes to stay active and catch multiple opportunities, here is a simple rule to keep. Scan as many pairs as you like over the weekend. Mark out valid weekly wick zone on each and build your watch list ahead of the new week. This way, you are not over-trading randomly. You are patiently waiting for high probability setup across multiple markets, giving yourself more chances without losing discipline. Once we have identified and marked out our zone in the pairs we are trading, we will drop down to the 15-minute time frame. Some people might prefer the 5-minute time frame. That is equally fine. What I do is to set my alarm and wait for price to get into the zone. And if my zone is too large, I will always refine based on the 15-minute time frame for a more sniper entry. Now, here is a key rule to note. If price doesn't return to this weekly wick zone within 1 week, that is from Monday till Friday, that zone becomes invalid and non-tradable for me. Once price enters your zone, don't jump in immediately. You wait for a change of character. That is your signal. That is your green light. The change of character should come with a momentum flip. You want to see a sharp move to the other side to confirm your bias. If it is in a supply zone, you want to see a sharp bearish candle that broke structure. On the other hand, if price is in a demand zone, you want to see a sharp bullish candle that broke structure to the upside. Just wait for that shift, then you get ready to enter. Now, here is another rule to keep in mind. You can apply any ICT concept that fits, such as order block, fair value gap, or even breaker block to get a precise entry point. But if none of these setups appear, no stress. Just pull out your Fibonacci 2 and consider entering from the 50% retracement of the move. This adds flexibility to your entries without compromising on precision. Then you place your stop loss just outside the zone and you take your profit at the next structure level. Look for a clean 1 to 2 or 1:3 risks to reward minimum. But honestly, this strategy gives way more than that if you follow it rightly. Now, let's take a quick look at some example.